Hi friends, welcome to Finance Today India. Here's the market brief for Monday, 8 September 2025. In simple terms, Indian stocks ended slightly higher today, with the auto sector leading the charge, while IT stocks took a step back. Globally, weak US jobs data has sparked hopes for a Fed rate cut, which could boost global liquidity and support risk assets. However, rising crude prices and trade concerns are still a worry for India's inflation. The Sensex and Nifty closed in the green, showing a cautious but positive sentiment. Autos saw strong buying due to optimism in demand, while IT stocks slipped amid global uncertainties. This is important because strong auto sales often indicate confidence in consumer spending, while weakness in IT can impact export earnings. Markets are closely watching the US Federal Reserve, as a weak jobs report makes a September rate cut likely, which could lower borrowing costs and attract investments into Indian equities and bonds. At home, inflation has eased recently, reducing pressure on the RBI, which kept the repo rate steady at 5.50% to maintain stability. Lower inflation is good for bond yields, but quick rate cuts may still be challenging unless data continues to improve. For investors, this means being flexible with debt durations and focusing on quality stocks. In terms of market levels, Nifty is trading in a broad range with resistance around 24,950s, 25,000 and support near 24,600, 24th size 700. Breaks in these levels are crucial for momentum traders. Gift Nifty indicates a positive start, but late session selling suggests a buy dips, sell rallies strategy is still in play. Position sizing and risk management are key until we see a clear breakout. For professionals, global bond yields are fluctuating due to fiscal concerns, even as hopes for Fed cuts rise. Precious metals have rallied and crude prices are reacting to supply news, which can impact India's economy through imported inflation and currency fluctuations. Keep an eye on upcoming inflation data from the US and China for insights on rates, growth, and commodities. In summary, with autos performing well, IT taking a breather, inflation cooling, and potential Fed easing on the horizon, the market favors selective risk taking. Focus on quality domestic cyclicals and maintain some gold or cash buffers. What's the big question for tomorrow's trade? Rate cut size or earnings resilience? Let me know in the comments.